Welcome back to We Here Now. I'm X. Let's get to it. So, indicators. Guys, we are almost done. We are almost done with the beginner stage of the trading doctrine. We're almost done. I believe there is about four more videos, I believe. So, video 11 Trading Doctrine 1.10 indicators. Use the right way. Most traders treat indicators like magic buttons. Excuse me. They wait for a signal, then jump in blindly. But professional traders don't rely on indicators, they predict price. They use them to confirm what they already see: structure, key levels, and trend direction. In this lesson, you'll learn how to use indicators the right way. Up to now, we've identified structure, support resistance, and market conditions. Indicators are tools, not rules. Used correctly, they improve timing and confidence. Used incorrectly, they create noise and hesitation. The MACD is one of the simplest, most powerful indicators, as we can go on to the chart, this is the MACD. This is the MACD. It shows momentum and trend direction. You see this trend? The momentum is how big these candles are, and the color. The darker the color, the stronger the momentum, and vice versa. Here's how professionals use it. Look for MACD line above the signal line. This is the MACD line. This is the signal line. Bullish. You see when they cross, bullish. Look for the MACD line below the signal. The MACD line below the signal, bearish. You see that? Notice we're confirming the trend, not guessing it. This is where people get confused and say that trading is gambling. It's truly not. It's truly not. So, next is the EMA stack. We have the green one, which is a 30-day. We have this yellow, which is 60-day. And the red is the 200-day EMA. How it's used. Price above EMAs confirms uptrend. This one don't really have long enough. Well, I guess I could just move down to a 3-day. Yeah, let's move down to a 3-day so you guys can see it. This green candle, move in a little bit more. Green candle is above all three. And another tip: when they are in order, as in 30, 60, 200, when it's in order like this, it's a strong breakout. Also, when the 30 and the 60 both crosses the 200, it's another strong breakout coming, or has happened already. Basically, anything that crosses the 200-day EMA and the structure of the market uh, is in line with that. That's how you know A breakout should be coming soon. So let's get back to it. How it's used. Price above EMAs confirms uptrend. Price below EMAs confirms downtrend. And then here's that downtrend right here. Price is below EMAs. Remember, EMAs confirm what price action already shows. What price action already shows. This is why I stress learning how to just read a chart for market structure. In order to be a good trader or investor, you have to spend the time looking at these charts. You have to, there's no work around it. You have to spend time looking at these charts. I have put in thousands of hours of looking at these charts. All right, that's enough of that rant. So, how to use indicators when structure. Here's the key. Identifying market structure, higher highs, higher lows, and so on. Identify key support resistance levels. Check market conditions, trend versus chop. Use MACD and EMAs to confirm trend momentum. This prevents false entries and gives higher probability trades. So what I'm about to do is find a random stock. Let's look at State Street. How much? Oh, I got what, 2 draws? Okay, perfect. Cool. All right. So I'm going to walk you guys through how I mark up my charts from start to finish. Start to finish. Yeah. So I would go to the monthly. Go to the monthly, see where price likes to go. And I will put a line there. Price likes to hang out right here. Look at all these touches. And also, price likes to hang out right there. And I like this one as well. Let me add another one. Because I see a lot of wicks right here. Yep, there it is. So that's for the monthly. And I let the monthly show on all, let me lock these. Let them show on all time frames. On all time frames. Because what's that is going to show on the smaller time frames is that now they can be a take profit area. I can set my take profit to these dotted lines. Why? Because price has shown me that it's a high probability that price is going back to these areas. So, without even looking, at my fib, I'll bring that up as well. I know price is definitely coming to like 102. 102, between 102 and 109. Price is definitely going there. No matter of fact, I'd say 107 to 110. All right, so let's move on to the 2-week. Top-down analysis. Remember that, top-down analysis. So, draw my extended line. Boom. Boom. Like that. It's not the best, but the goal isn't to be perfect. See that? And how does this one look? Oh, that's a perfect trend line. That's a good trend line right there, coach. All right. So everything is starting to come together. Now, this one, 2 week, is current interval only. Current interval only. Why? Because once you start drawing all of these lines, it can get confusing. So now once I go down to my weekly, I should see only the grayed out dotted lines. Like so. Now, oh, well, what do we have here? Now what I can do, I thought this looks like a flag or a falling wedge right there. Now what I can do is continuously drawing my support and resistance lines. In other words, my trend lines. Let's see. And this is called a rising wedge. This pattern. It's called a rising wedge. And if I were to flip it, it would be a falling wedge, which is a very strong pattern. A very strong pattern to the opposite side. It's a reversal pattern. So, now that I have that, I would draw some lines right here on a weekly, but it's just not enough candles for me just yet. I'm not trying to force any imaginary trend lines or anything like that. I'm just trying to understand what the market is giving us at this moment. All right, now down to the 3 day. Now we can start to see what's being formed here. So now we're getting some shape. We're getting some shape, guys. We are getting some shapes. Now when drawing trend lines, price can go through a wick, or the trend line can go through a wick. It cannot go through a body. Remember that. A trend line can go through a wick, not a body. Not a body. And 3 touches equals a trend line. And on higher time frames, like the ones that I teach, the trend lines hold so much more. So we have a falling wedge, or some might call this a flag. Some might call this a flag, or just a regular channel. Just a regular channel. So it's still not done. So of course I'm locking it. Current interval only. Locking current interval only. Now go to the daily. Now we just continuously draw my trend lines so we can get a well-rounded. I don't like that. I think I like that one better. Yeah, that looks better. So we got 1, 2, 3, 4, 5, 6, but that's close. So we got 1, 2, 3, 4, 5, 6, 7. So support, resistance. Support, resistance. So we know where price can go, and we also know where price have been, if that makes any sense. So remember I said somewhere between like 109 or something like that? See, this was showing for the daily chart 118 that price is going to go. I know for a fact price is getting there. Just because price has fallen below 2 EMAs already. So the next target is the other EMA, or very close to the other EMA. All right, so let's lock these up. Current interval only. Current interval only. Also, what do you see right here? That dotted line. That dotted line. So this is why I say I can use that as a take profit area. Why? Because look how many times price has went to that area. Price has went to this area multiple times. And then the next one, the other one. Look how many times price have come to this area. And this is on the monthly. This dotted line, these dotted lines are based off the monthly chart. And now this is the daily chart. So this is why I do it on the monthly. Because the monthly shows how many times price have been to this area. All right, let's move on to the entry. Let's move on to the entry. So now, I don't like how this looks because it's not a lot of volume, so it looks weird. Yeah, it looks weird. All right, so but it still works. It still works. So basically, price can still come all the way down here and still be respected in this chart pattern. So now once I move back up to the monthly, shouldn't see. Oh, I didn't like the 12-hour. I didn't like it. But you can start to see how how the different time frames and trend lines react with one another. That's the 2-week. That's the weekly. The 3-day. Yeah, see, you got a double because one of these, so both of one of those is for the 12-hour. So another thing I like to do is get a fib retracement. This is all advanced. I'm just showing you guys how I set up my charts. Oh, this is not a fib. That's an extended fib. This is the fib. So this right here, this 618 is a golden area. I mean, price most likely will hit this at some point in time. Almost every single time. Almost every single time. So right now, this price is between, why don't you look at that? What's in this area? A monthly level. So I'm almost certain that price, if price pushes past this monthly level, this 110, it's definitely grabbing this $98 monthly level. I am certain that will happen. Not only because for the 2-week, it's overbought. The MACD is overbought. meaning that price has to come down. MACD is overbought and it's hitting a no, I'm not gonna use that one. Yeah, nah, we can use this one. Price is hitting a 20-year trend line. This trend line has been active for over 20 years. This was back in 2000. As you can see, the price is down here. I mean, the date is down here. This was in 2000, 2008. We all know what happened then. Was this COVID? Nope, January 18th, 2018. This must have been COVID right here. Nah, where was COVID? Oh no, this is not the S&P 500. And then again right here in 2026. So I know for a fact price is coming down here. 98 is your take profit. All right. Let's read this again. How to use indicators when structure. Identify market structure, higher highs, higher lows, lower lows, higher highs. You know how that goes. Identify key support resistance levels. I did that. It's a key support. Well, key resistance, key support based off the 2 week. It's the highest time frame that we use. Or on a 12-hour, which is the entry, key resistance, key support. Check market conditions. Trending or chop is actually trending from back here. Yes, so it's trending and it's doing a continuation. As you can see on the MACD, the red is getting like a little pinkish, so it's not as deep red, meaning a reversal was coming. Use MACD and EMAs to confirm trend and momentum, which we've been doing that. So this prevents false entries and gives higher probability trades. Common beginner mistakes with indicators. Most beginners wait for indicators to tell them what to do. Enter trades on every signal, ignore structure and key levels. The result: choppy entries, small losses, frustrations. Professional traders flip this. Indicators confirm, they don't lead. Here's a real world scenario. Market in the uptrend. Higher highs, higher lows. Price bounces off key support. Boom. MACD confirms bullish momentum. I guess I can't use that one. This will be a bullish momentum right there. Well, yeah, price bounces off key support. MACD confirms bullish momentum. It's confirming the bullish momentum, changing from red to green. EMA stack confirms trend. All on top of each other. Green, yellow, red. That's a high probability buy. Notice how everything aligns before entry. This is repeatable. And on top of that, we have a double bottom right here. We have a double bottom, but this is on a smaller time frame. Yeah, double bottom, boom, boom. So if this, then that. If structure is bullish and support holds and MACD confirms, look for long entries. If structure is bearish and resistance holds and MACD confirms, look for short entries. If conditions don't align, stay out. Indicators don't make decisions, you do. So in the next lesson, we'll cover entries and execution. Now that your indicators confirm setups, it's time to plan entries, execute with confidence, manage trades with multi-time frame awareness. In other words, top-down analysis. This is where your system goes from observation to action. Guys, we are almost there to start trading. And so you guys can see how easy this truly is. It is truly that easy. All right, you've been watching We Here Now. I'm X. I'm tired. I'll see you guys on the next one. But again, like always, this is not financial advice. This is how I trade. And guys, you guys are almost there to becoming traders and investors. I'll see you guys on the other side. Peace.